Well, first, I would want to start with the good news. I mean, back in April, when we were putting together our projections for the year in the middle of, an unprecedented increase in tariffs from the U.S. on the rest of the world, we had a range of scenarios. The situation was very fluid, and there was a downgrade in growth, and it ranged from modest to significant. And so now, 6 months later, where are we? And our answer is, well, the good news is we're kind of at the modest end of the range. So that's the good news. It doesn't mean that the tariff shock has had no impact. We can see the impact of the tariff shock in the US and elsewhere. But private sector has adapted. There was a lot of rerouting of supply chains, import front loadings in the first part of the year. The tariff shock itself has been scaled back. There were trade deals, many exemptions. The effective tariff rate that we are calculating now, slightly under 20%. It was projected before to be around maybe 25%. Now, close to 20% is still elevated. It's still a high tariff rate from the US and the rest of the world. And then there are a number of other things that have helped the economy do better. Financial conditions have remained very accommodating. We're in the middle of a very strong tech, AI-related investment surge. Fiscal policy in a number of countries is basically giving some more fuel to the economy in China and Germany, in the US next year. So you put all of these things together, and our growth number is actually very similar for 2025 to what we had a year ago, 3.2%, even if we expect a little bit of a slowdown next year to 3.1%.
Well, just as you dust off your report, we have the US and China escalating on a trade war. How big a worry is that still as we count down to the end of the year?
Well, it's a stark reminder, if we needed one, that we're in an environment in which trade policy uncertainty is with us. There could be flare-ups in trade relations. They could be very damaging to the global economy. For instance, we did a downside scenario in our report where we try to factor in some of these tensions. Of course, not the specific details of what's happening between the US and China right now, but sort of thinking about what could go wrong in the trade space. And it's easy to get global output coming down by 0.3 percentage point this year and next if we have trade tensions that are escalating again. So this is really an important reminder that we need to achieve clear, transparent trade agreements, bring back stability, restore transparency, allow businesses to make plans without fearing about how they might be upended in the future.
I want to dig into where the tariffs are starting to show up though, because it has been a slow time coming, as we've had a lot of front loading and a lot of the distributors and merchandisers have been keen to settle and take on board that tariff impact themselves before pushing through to consumers. But to what extent are we now starting to see a drag on growth, on investment, and on some of the equipment investment?
Well, we're starting to see the pass-through of tariffs into prices at the retail end. So let me unpack this for you. So first, if we're looking at who is bearing the cost of the tariffs right now, it's not the exporters. When we look at the import prices at the dock in the US that are before the tariff is applied, they haven't changed. So the exporters haven't been eating the tariff. They're basically selling the goods in dollar prices at about the same price as before. But we don't see the full increase in the retail prices. So what happens is in the middle, the importers, the US importers, are reducing their margin. They're absorbing the tariff right now. That what we anticipate is, and they've started doing so, is that gradually over time they will rebuild their margins, and therefore these prices will start seeping into retail and customer prices. So there will be some price pressures coming from that in the next year. And as we see that, when you set prices, you look at what your competitors are doing. It's not just that you set your own price in a vacuum. And so as you see your competitors starting to increase their price, you're more likely to increase your own prices. So this kind of complementarity in price setting, that will also start kicking in. And so we expect to see some price pressures continuing. And you look at the whole picture for end of 2024, 2025, inflation has not been making much progress in the US back to central bank target, back to 2%. We are at 2.7%. We're expecting modest improvement next year, but still above the 2% target.